Hello and welcome. You tune into Your Trades with me, Ankita Saxena, and with me is Shreyansi Singh. Shreyansi, what a choppy day of trades today. In fact, we hit those record high levels, but then a complete reversal in the second half.
It up, yes.
A complete reversal in the second half before the FOMC meeting. In fact, we hit record high levels on Nifty, and then all those gains were completely knocked off. Even though we managed to recover from the day's lowest point, nonetheless, ended the day in the red. 25,377 is where we closed that on Nifty. The broader markets too reeled under pressure to end the day in the red, but towards the end we did see Nifty mid-cap managed to recover 300 points off the day's lows, but managed to close in the red, and so did Nifty small cap, ended with a cut of 0.3%. But speaking of the outperformance, that came in from Nifty Bank. Now Nifty Bank was bucking the trend. It ended up almost 500 points up. There you go. Nifty Bank ended the day 561 points up. That was completely bucking the trend. It was also weekly options expiry. Sectorally, barring Nifty Bank and financials, all the sectoral indices were in the red. And the another interesting thing to note here was the spike that came in on India VIX, that spiked almost 7% today. So high volatility in the markets is what that indicates. So Nifty India VIX spiked up 7%. The IT index was completely knocked down in trade today. The external facing stocks. FOMC meeting is due. Before that, the entire IT pack was reeling under pressure. In fact, it was trading with cuts of almost 3 and 3.5%. Stocks besides the IT, stocks in focus were Bajaj Finance on the back of the Morgan Stanley note that came in. BSE was trading at all-time high. Torrent Power, HEG, Graphite, India were in focus today. Also on the back of the Resonate Graphite announcement that on the price hikes that came in, though that pack was in focus. So that was where the gaining streak was coming from. Let's look at the losers now. OFSS, Emphasis, Blue Dart, REITs, Lotus Labs, all these names were knocked down. In fact, trading with cuts of almost 5 to 5.5%. So these were the losers, big losers in trade today. Net, a rather volatile day of trade, a rather choppy day of trades there, Shreyansi.
Well, absolutely. And some of the losers that we did have also, you have Sun Pharma and the likes of Cipla as well making it to that list. So some of those pharma names also were down and out in trade, the likes of Dr. Reddy's Labs, Cipla as well as Sun Pharma. But let's also take a look at some other news and stories that kept us busy today. Now, Morgan Stanley's latest note on emerging markets hails the outperformance in Indian equities as well. India has now surpassed China as the largest MSCI EM, and as of end of August, India is now the largest EM market per MSCI IMI as well, and China's weight has also fallen by a half since peaking in early 2021. So that's an important update coming in when you take a look at Morgan Stanley's latest note as well. And the event of the week definitely is going to be US Fed's outcome. US Fed is expected to announce its first interest rate cut in over 4 years. Important meeting ahead of the November 2024 presidential election as well, and that's why we've all been watching out for it. US Fed will be releasing the dot plot as well to hint at future rate paths as well. And key lending rate has been at a 2-decade high of between 5.25 to 5.50% for the past 14 months. So that's largely the backdrop that all of this comes against. Now, the Fed, of course, began its rate hikes in 2022. So this is going to be a very important meeting. Definitely an outcome that we've all been watching out for. But another thing that we've really been watching out for, Ankita, is that announcement coming in. Now the cabinet has cleared the One Nation, One Poll proposal, and that's the one that kept us busy in the last few hours, because when you take a look at what really are the pros and cons, you've got some making it to both the sides. So first of all, of course, you did have the Kovind-led panel that was formed in September 2023. The government had appointed a panel under former President Kovind as well. And in terms of the pros, of course, you have the fact that this will be reducing the cost of holding elections. That's one pro. And it'll also be limiting elections to a single season. And that's also an important pro that we have in terms of the One Nation, One Election policy. In the con, of course, you do have the, it could be posing issues in terms of logistics. So that's really something that we're really watching out for, Ankita.
Yeah. Definitely, those are the cues that we will be watching out for, Shreyansi. But we'll get the guest on the technicals, Aditya Arora, founder and multi-asset research analyst, from Adelic. Hi, thank you so much for joining us, Aditya. Aditya, tell us, a rather choppy day of trades coming in there. We did see Nifty hitting its record high before it gave up all the gains. In the second half, it was trying to recover, but nonetheless ended the day in the red. The interesting thing to note was a sharp spike that came on India VIX, which was up almost 7%. So there is volatility in the market. We also have the FOMC outcome today. But tell us, going ahead, what are you penciling in on the benchmarks right now amid this high volatility and the spike in India VIX?
Hi, very good afternoon. Thank you for having me on the show. So yes, India big spiking up is evident and a likely scenario because this Fed event is very uncertain. Given that usually every time the probability is around 5 to 10%. Let's say 25 basis cut is probability of that is 5 to 10% or 90%. But this time probabilities are settling around 66% for 25 BPS cut or 50 BPS cut. A lot of banks are pointing towards 25 BPS cut, but Fed future fund rates are pointing towards 50 BPS cut. So market is very uncertain what will happen over here. In both the scenarios, there's case for disappointment. So either market could go up, 2 to 4% higher or 2 to 4% lower. That is one of the scenario. And second, last time also we have a comparison with 2007. We had Federal Reserve meeting on 17th and 18th of September 2007, and now we have the similar kind of dates. Last time, market spiked up 4% post the rate cut. So this is the first rate cut after 2020. So this is going to be very significant. Hence, we have seen, India VIX spiking up 6 to 7%. And I think there's scope for further increase over here because the kind of moves which can come in US markets and Indian markets, I think it could, come down to about 1,000 to 2,000 point on Bank Nifty and 500 to 1,000 points on Nifty. So that's my view on index level, and I think one should brace for significant volatility ahead.
Aditya, so that's the verdict coming in from Aditya as well. He's also penciling in a 50 basis point rate cut, and he's also talking about how there's some volatility that should also be penciled in. But Aditya, what are the picks that you have for our viewers today?
I think in a scenario like this where there's a lot of uncertainty, FMCG sector clearly stands out because that's like an evergreen sector. And today we have seen Nestle breaking out very nicely with good volumes and good participation. So this one is a buy at 2598, 2540 is the stop loss, and 2700 is the target.
All right, Aditya, defensives is where you take shelter when there is volatility in the market. But with that, we will let you go. Thank you so much for taking the time out and joining us today. But moving on to the word from the wise S. Narain, ED and CIO, ICICI Prudential AMC is positive on financials basket. What is the rationale behind it? And let's go across and listen in to his explanation on why he thinks this space has underperformed so far.
The financials underperformance is primarily because of the FIs being overowned in that segment. And what happened was the benchmark for them, which is MSCI, had a very low weightage in financials. And they were very overowned. If you look at the period from 2021 onwards, they've been the only segment which has sold. So they were overowned that segment, and thanks to low weightage in financials in their MSCI index, and they've been selling. I think by the time November happens, the benchmark weightage in financials would have gone up substantially. So the key reason for the selling in financials comes to an end by November. So I don't think it was an economy issue. I don't think it was a valuation issue. It was an excess holding by FI issue, and that excess holding by FI issue is coming to an end. So that's one of the reasons why we are so positive on financials. The only challenge with financials being your most positive sector is it is not a defensive sector. It would be always good, like in 2007, we used to be positive on consumer staples and pharma when the market was very bullish, but those sectors are very defensive. So to be bullish on those sectors was very easy, whereas to say that you're very positive on financials is a little bit of a problem because everyone knows it's an economy sector, it's a leverage sector.
Alright, then that's the word coming in from S. Narain when it comes to the financials pack. Let's move on then and let's put the spotlight back on Morgan Stanley's latest note on emerging markets that hails the outperformance in Indian equities. Then India has now surpassed China as the largest MSCI emerging market as well. Let's go across to my colleague Somit, who's standing by to understand the rationale behind Morgan Stanley's overweight stance on India then.
Well, Morgan Stanley says that India has displaced China as the largest MSCI emerging market in the index. They are saying that China's weight has fallen by nearly half from its peak that we had seen back in 2021, and India is now the 6th largest market globally, just behind France as per Morgan Stanley. Now, they think that India will continue to gain a share due to the market outperformance, the new issuance that we have been seeing in the market, and because of the increased liquidity in the Indian market. They also remain overweight when it comes to China, and they continue to remain overweight on India and underweight on China in their pan-India emerging market asset allocation. And they're saying that India's nominal GDP growth is around low teens, but that is still 3x that of China currently that we are seeing. And this difference in the growth rate of India that we are seeing is generating a profound divergent operating and earnings growth performance between the companies in these two geographies, that is China and India. Now, just to put things into perspective, in the MSCI All Country World Index, US holds the highest weightage of around 63.2%, followed by Japan, which has a weightage of close to 5.7%. India's weightage now stands at close to 2.35%, while that of China now stands at close to 2.2%.
All right, with that, it's time for a quick breather. Don't go anywhere. We'll be right back.
Welcome back. Thank you so much for staying tuned in. Still watching your trades. Let's get you some more news and updates then. And it was the IT pack that was down and out in trade today. TCS, Tech Mahindra, LTI Mindtree, HCL Tech down anywhere between 2 to 4%. Now, Nifty IT, of course, plunged with all the major IT stocks trading in the red ahead of that Fed meeting outcome as well. In fact, we also have my colleague Anisha who's standing by with a snapshot of what really is impacting all of these IT counters. Anisha?
Well, it's a bit counterintuitive, because if there is a rate cut happening, the expectation is that the spending from US companies will actually accelerate, and ideally we should have seen a bit of a green tick today on IT stocks. But today it's down in the trading session, and that started with the headline that we got earlier in the morning from Accenture itself, where the company has delayed promotions for a period of 6 months. The street is reading it as a sign that things still haven't recovered. In fact, the slump that we have been seeing in spends is expected to be protracted, and that's the reason the company for now has held off promotions, and perhaps 6 months down the lane is what we'll see. So that is what really puts spanner at works as far as the entire IT sector is concerned. What really added to the woes is the latest commentary coming in from LTI Mindtree, wherein they met the analysts at Citi Brokerage House, and they said Q2 is likely to be on similar lines as Q1. There hasn't been a meaningful pickup as far as discretionary spend is concerned. They're not expecting it anytime soon. Plus, they added the fact that margins could be under pressure because there's that heated competition in terms of pricing as well for bagging some of the deals. So all of that commentary has put a bit of a somber note on the IT sector today. Remember, the sector has run up considerably. In fact, over the last 2 to 3 months, we had seen a bit of a rise as far as Nifty IT index is concerned. YTD, it's up almost 18-19%, and the valuations are no longer comfortable. Despite being no major change in the fundamentals of the sector, the IT sector valuations are trading at 5-year or 10-year highs. So there's very little room for disappointment there, and that's why perhaps at the inkling or at the sense of any negative news coming in, the sector reacts negatively. Today as well, it's down in the trading session. Maybe tomorrow might be different once we hear out from the Fed chair, but for now, the IT stocks coming under acute pressure.
Absolutely. Before the FOMC meeting, the IT stock was really under pressure, but a couple of other names that were in focus today: Aster DM, Torrent Power, REC, Bajaj Finance, all of them were in focus today. And to explain why they were in focus, my colleague Gaurav is joining us. Over to you, Gaurav.
Well, yes. First, let's talk about Aster DM, because as per media reports, Blackstone's Care Hospital is in advanced talk for the merger with Aster DM. The paperwork will start soon, and as a result, we saw some uptick in this counter. Next, let's talk about Torrent Power, because company recently received LOI from Maharashtra State Electricity Distribution for a supply of around 1500 megawatt of energy storage capacity in a pumped hydro storage project. Now, this will be the first project which is awarded in the country, and as a result, we saw some uptick in this counter as well. Next, let's talk about REC, because company says they are committed to increase their renewable stake to around 30% of the total loan book by FY30, and at the same time, they also sign an MOU with RE developers worth 1.1 lakh crore rupees, which will be implemented in the next 5 years. Other than that, let's also focus on Bajaj Finance, because Morgan Stanley has now maintained its overweight rating and a target price of 9,000 rupees per share. What they say is that the EPS they have actually cut down the EPS estimates almost by 1.5% over the next 2 years, but they find valuations at an attractive level, and that is why they have maintained their overweight rating. Lastly, let's also focus on companies like HEG and Graphite, because Resonac Graphite, which is a leading manufacturer of graphite electrodes, has increased the price almost by 20%, and we may see some uptick in such companies' margins as well. So definitely watching out on all these counters on the back of the news flow as well as the brokerage note that we received today.
Alright, thanks Gaurav for that list of stocks that were buzzing in trade today. Moving on, then IPO Rush has returned on Dalal Street with companies raising more than 61,300 crores this fiscal year alone, and bloated listing gains as well for many stocks. But is this enthusiasm long overdue, or is this just over exuberance in the primary market? Listen to what Pranav Haldia as well as Sandeep Sabharwal's take is about this then.
We shouldn't read too much into the oversubscription numbers per se, but I think, as long as IPOs are getting subscribed, we have to again be conscious of the fact that, firstly, no company wants their IPO to fail. So they would not price it in a manner that, is extremely exorbitant in its pricing. I think if there are good quality issuances at attractive valuations, there would always be enough buyers for that. And that would not necessarily either impact other IPOs or even the secondary market.
Housing finance is a business which has issues related to continuously falling margins, because every financial institution is into housing finance now, and the ROAs also will be lower than many other lending businesses. So I find it tough to understand the valuation at which this stock is trading. The only explanation is low liquidity, and that has driven, and the buying which is happening, that's driven the price up.
And well, all eyes are on the Federal Reserve or the FOMC meeting that takes place today. The US Central Bank is expected to make its first interest rate cut in over 4 years. Meanwhile, the debate around the rate cut is no longer about when, but about how much. Is it going to be a 25 basis points cut or a 50 basis points cut? My colleague Anisha Jain is joining us to tell us what to expect.
Oh, well, yes, the consensus is there is going to be a rate cut. Now, whether it is 25 bips or 50 bips is the biggest debate point. 50 basis point is something which people say that the Fed has the room for, but there is part of the street that believes that 50 basis points cut might, kind of indicate that there's a deeper problem in the economy and that it needs extra push. So that's why it might be a bit negative. But if you look at the probability right now, over 60% of the participants believe there is going to be a 50 basis point cut. 25 basis point would perhaps be very measured, very moderate, given the fact this will be the first rate cut that US Fed will announce in a matter of 4 years, because the last time the interest rate cut cycle had started was back in 2019-2020, just around that COVID time period. Now the situation has improved considerably. Inflation has come off materially. Remember, at one point of time, you were staring at inflation levels of 9-10%. That's come down right now. You also have the fact that labor market has weakened a bit. Economic data has been steady. We just saw the retail sales data coming out, and the indication was that at least the base economy is doing okay. So that is also something which provides that bit of fillip. Having said that, the dot plot is also something which is going to come out today. So not only the interest rate decision of tonight will be important, but the trajectory from here out is also very important, because part of the street believes that there could be further hikes, or rather further cuts, I beg your pardon, to the tune of 100 basis point in the next 3 meetings as well. So direction towards that will also be important. Whether there's a tweak in the inflation and growth estimates for the next couple of years, that is too something that the street will watch out for. Of course, this is a very important meeting, because in November we all know that there is that US election. So just ahead of that, how the US Fed poises the overall economy is something that we'll watch out for. Lots really to watch out for, but yes, the million-dollar question, 0, 50 or 25, we'll get to know tonight.
Well, absolutely, Anisha, and looks like it's a busy day for you. What with the rub-off impact coming in on Nifty IT as well as the FOMC meet outcome that we're currently penciling in. But let's get you some more commentary then. And Anurag Singh, managing partner, Ansid Capital, also caught up with us. And let's also tune into the commentary coming in from him as well, because he does expect a 25 basis point rate cut from the US Federal Reserve, as well as dovish commentary by Fed Chair Jerome Powell. Listen into what else he had to say then.
These rate cuts are like bullets Federal Reserve has. And finally, if you look at their dot plot, eventually they want to get to like a 3% by end of 2026, which means that all they have is like 9 bullets. Why would you want to waste 9 bullets by firing 2 in a row just at the start and just kind of mislead the market? So I think all of this together, makes me believe that it'll be 25 basis points, but with a lot of dovish talk. I think Chair Powell will have a lot of dovish talk to do tomorrow. And I think that's about it. That's where my head set in, and I think that's how it's going to be. Unless we all get surprised tomorrow, so never say never.
All right, with that, it's time to wind down on this edition of Your Trades. Shreyansi and I will take your leave. Thank you so much for tuning in.